Stock market indices are up slightly of late, but not nearly enough to lift poor investor sentiment. Pessimism persists despite data showing stronger economic fundamentals, which leads many analysts to question whether China's markets might require an altogether different approach from investors. We're talking to Philip Chan, Research Director of Shanghai Hong Kong International Securities in Hong Kong, about how he thinks the China market should be played. Good morning, Philip. It appears investors aren't paying attention to the economic picture when it comes to investing in Chinese stocks. Is this indicative of basic structural problems in China's stock markets?
Yes, that's right. I think it's from the point of view of the foreigners, right? They've been avoiding the markets completely over the last year, really, apart from exceptional circumstances. The locals have been, very supportive of the Asian markets in China all of this year. But basically, the structural problems are, one of accountability and fiduciary duty by directors, and also, ongoing disclosure requirements after listing. They're not coming up to scratch on this to satisfy foreign investors.
Are there any reforms that the market can look forward to?
Well, there's been talk about the securities laws, which will unify all the rules at the moment, which govern the exchanges in China. But this has been talked about, for the past couple of years, and we still haven't seen, this new set of securities laws coming out, basically because of probably structural problems within the organizations which are hoping to draft these laws.
Now, you did mention that sentiment is poorest in the B-share market, which is open to foreigners. Now, they've hit record lows recently. What does that reflect?
Well, it's just a reflection of a mixture of things. Most of the companies, particularly in Shanghai, produce very poor operating results at the halfway stage, and even last year. They're not expected to perform that much better for the full year this year. I think it's just a reflection of foreign investors they're tired of the markets, so and there's very little liquidity as it is. It's a sort of vicious circle, so that's why the markets keep drifting down.
But there are several new issues coming up. Is there any reason to think these companies will do better?
On the operational front, they will do better. It's just a question of time. The majority. I think we're going to see some year-on-year growth in earnings for the majority, at least by the second half of next year. Maybe some of them will be earlier than that. And, that will begin to attract foreign investors back, probably before that anyway, because they tend to look ahead 6 months. So I think if we start seeing a turnaround in the early months of next year, then we would see foreign interest coming back.
We look forward to that. That was Philip Chan, Research Director of Shanghai Hong Kong International Securities. Thank you, Philip. Here's a look at how major Asian markets performed in Thursday's trade, starting in Japan. Tokyo stock